Today's webinar is on the short-term loan program. It was revised effective December the 1st, 2014, and since that particular time we've had four clients participate, 2 municipalities, 2 municipal enterprises. What we're going to go through today is the revised short-term loan program, what it is, the paperwork involved, a overview of the new loan document, and going through the examples of the clients that did participate in hopes that it will show you just how flexible and how much of a benefit it is for your municipality to come to us versus your bank. So with that, we will go down through what the short-term loan program is. It's short-term in nature. It's not for long-term financing. What it is to carry you from the day you receive your funding under the program to the disbursement date of the upcoming MFC debenture issue. Once the next debenture is done, that's when this loan matures. Whether you've rolled your short-term loan into the debenture issue or not, but that is the maturity date of this loan. The program is 100% municipal, which is also offered to municipal enterprises. So you can't have a nonprofit come to us that's within your municipality, or you can't borrow on behalf of a nonprofit and turn the funds over. This is for your purpose. You have to own the particular capital asset. The program, by MFC's policy, it's for completed projects. We don't do construction. We don't do pre-construction, the design phase. We need the physical asset, so whether it's a building or a vehicle or whatnot. The terms around the loan is from the date of completion. So it has to be complete. And there's a lot of the question of when do you consider it complete. So we're looking at when it's finally put into operation. That's when we can say it's complete, and therefore you're entitled to access the program. We say substantially complete, that's 90% or better, you're in the final stages of doing it. We can actually say it's complete because you know your final costs at that point. We have $50 million through a line of credit with the Department of Finance, so that's our upper limit. It's still on a first-come, first-served basis, so depending on the number of participants accessing the program and the dollar amounts they want, it could use up the $50 million. We've had some interest for bigger projects, so that is the upper limit. So if you do want to participate, access now versus holding off. The big difference in the revised program versus the old is the interest rate. The old program would take Bank of Montreal Prime less 1%. The new program is taking 90-day banker's acceptance, which is the chartered banks writing commercial paper and what interest rate they would get on that commercial paper. And we're adding 50 basis points, that is 0.5%, using the CDOR rate. And really that's taking the 3 bigger chartered banks and taking the average of those 3. So it would be the CDOR rate plus 0.5% would be the interest rate offered to you. That is the program in a nutshell. To access the program, before you even make a written request, contact the manager of financial services to state your intention on accessing it. That way we can discuss the dollars amount, when you want the money, and that way we can inform finance that we're going to draw on our line of credit. Once we get off the phone, the manager of finance will send you an email with the template of the letter. which we have an example here. So the letter would be addressed to the CEO, Paul Wills, or you can actually send it to myself, as long as it's, we need the physical copy to be sent in, be addressed to concerning the short-term loan program. It's making a firm commitment to access the program. That's coming from our lawyer. And here you would fill in your municipality. So in this example, we're saying the town of ABC. We're looking at $100,000 of borrowing. Down under the purpose, you would state the purpose supported by your TBR. So you could have multiple purposes. In this example, we're only saying purchase of land for $100,000. The TBR number and when the minister. We're looking for when the minister approved your TBR. And then on the bottom is the total. And then down on the bottom, it is signed by the person in your organization that can legally enter into a binding contract with MFC, so whoever that is. So therefore, that would make it a legal commitment from your organization. And here would be an example of the TBR that you would use. So between the written letter and a photocopy of the TBR, that would put you on a board of directors agenda for approval. So when it comes to the board approval, it's very quick. It could be on an upcoming regular MFC board meeting, or if it could be a special one, just a conference call with this one item. It's very short. They would ask TBR in place, and everything is fine, and MFC staff would answer all their questions on getting your loan through. After the board has approved your loan, we would send you out the legal loan agreement to access the program. And here is an example. It's similar to the legal documentation under the old version of the program. The amount that you're borrowing, the date effective, your municipality or municipal enterprise name. But Section 3A is the big change. We would say it's the 90-day CDOR rate plus 0.5%. And here it is, if you were to access the funds, if the loan date when we would transfer the funds to you is August the 31st, we would state here the maturity date of this short-term loan would be on the disbursement date of the fall 2015 proceeds. Within the document, we don't quote the CDOR rate because that would come after the fact. So we would communicate that through an email of what your rate is. So MFC would send over its own documentation to finance saying we need this money on your behalf, and we would do electronic funds transfer to your bank account, and that is very quick versus under the old program we would have to wait till the first of the month. So this can happen very, very quickly. So that's a bigger benefit for you. You can get your money quicker under this program than the older version of this program. The last three: maintain lowest possible cost to you, the municipality, the minimization of the risk both to you and to the corporation, and the benefits by lower interest rates and flexibility in repayment terms can be shown by the 4 participants under the program as of this date. So under the program, we've had 4 participants. The first client accessed it on day 1 of the revised program, and the 90 days CEDAR rates were 178 and just under 1.5. The 91 days was to carry it to the very first business day, so the 90 days would have been a weekend. This is a Monday, so that's where the 91 days. The first client paid to MFC $2,100. Prime less 0.7, and 0.7 is what, when we done a survey a while back, that was the average discount municipalities were getting from their banks. So by using prime less 0.7, we're saying client A would have paid to their bank $2,800, so a savings of roughly $735. The second municipal enterprise shows you another benefit to you as a client. On December the 23rd, they borrowed $450,000 for the 90-day CEDAR. $179 was what they paid. So when that came up to renewal and they participated in the spring debenture, they were able to pay it down. The old program wouldn't allow that. It was either carry the $450 or pay off the $450. The benefit under the new program is we can pay back to our creditor the $50,000. So it was a benefit to this organization. In total, they paid a little over $3,100. If they went to their bank under this example, they paid just under $4,100. So they saved through MFC's program $960. The next 2 are municipal clients. The $469,000 carried them to the spring debenture for a total of 49 days. Just under 1.5% they paid to MFC, totaling $942. They would have paid 2.15%, totaling $1,350. So they saved $415 roughly by coming to MFC. After the spring debenture, we had a client come in July that wanted money, and we're carrying them for 88 days, assuming that's when we're going to debenture in the fall. And that's when the proceeds are estimated to be dispersed to the client. So again, this one will mature on the date of disbursement of a debenture. Their quoted rate on the short-term loan is 1.244%, charging $535 roughly. At the bank, 2%, which would be $863, for a total savings of $326. All in all, the 4 clients saved roughly $2,400. So hopefully that's a win-win. So that is the revised short-term loan program through the MFC. I hope you found the webinar very informative. And if you have any further questions, you can contact the MFC directly and talk to any of the staff who will be very happy to answer all your questions. Thank you.